Welcome back, everybody. Let's take a look on euro currency. Sive Morten is here with the ForexPeaceArmy.com. So Friday actually was a tough session. We've got the payrolls. In general, as we said, it's was mostly the bet, and if you have taken position on Friday, was the bet directly on the payrolls report. So technical analysis hardly could be used in the situation that was on Friday's morning. As a lot of uncertainty was, as was discussed, and with the conservative approach that we also talked about was to stay aside and see what the payrolls will be. Despite that, we said that overall technical picture suggests that it stands slightly bullish rather than bearish. And the same we could say about the weekly chart, because in the last 4 sessions you can see market stands in a tight range. There's a number of bars when it stands above the 30% support of the whole upper direction here, which is mostly indicates the bullish sentiment. Despite as long market stands in a tight range near the top, as more signs of the bullish dynamic pressure are appearing on the weekly chart as well. The question is only about the timing of this possible breakout. The same we could say about the overall fundamental background in the United States economy. Particularly speaking, in next week, it seems that the CPI numbers will be the key to the Fed decision, because with the recent payrolls report, not only this month but the month before, investors start thinking about and pricing in actually the chances of the 50% basis point cut. Although fundamental picture doesn't suggest that it is needed, still, with the so strong pressure on the Fed Reserve and changing of the members inside of the committee, the open market committee, its decision doesn't seem like to be impossible, right? So I would be surprised if actually we will see the 50 basis point cut based on the decision that will be made. At least currently, this topic is discussing in the media, and it probably has some background. So by our view, the CPI numbers will be the key, and it will tell you what really to expect within 2 weeks on the Fed meeting. Stronger CPI numbers probably will suggest and hold the 25 basis point decision. Weak CPI numbers increase chance for the 50 basis point cuts. That's why volatility on CPI numbers report might be even greater than on the Fed meeting on the 17th of September. And this will happen next week. Also, don't forget about the European Central Bank meeting. Although currently its consensus stats rate will remain intact, it's very interesting what the Lagarde will tell about the overall economic condition. So now turning back to the charts, what we could say, actually the external factor, which is actually not of our credit, as you understand, pushed price higher. It even led to work properly the grabber that we have identified, and market jump here. At the same time, you can see that price hasn't gone too far from the trend line and actually from the previous top. And I would say that the major picture stand on the fall time frame chart, and it relates to the consolidation that we have here. This flag, it's some kind of the channel consolidation. So until market stands inside it, you can see this in general very choppy and really massive price action inside of it. And market has to break on some free space to start forming something big on the weekly chart, on the daily chart. Some breakout either to the upside with acceleration, where we finally could start dealing with the big hand short pattern here, right? So it might be short ahead, next short might be formed, or it will drop out of this consolidation, which suggests drop back down to the 114 area. Obviously, there should be some fundamental background for this such a big moves. Speaking about the Monday, here we have a few thoughts on the current situation. First, let's take a look that market still remains inside of the channel, despite the payrolls boost. And here might be some signs of the wash and rinse, because market just moved slightly above the previous top and dropped down below the lows. That might be the wash and rinse. At the same time, which suggests actually some downside action. At the same time, the major target here, which is big ABCD pattern, COP contraction objective point, which is a 618 extension of the AB leg, and our butterfly target mostly stems in the same area, so we could treat it around 1780, 1790, has not been touched. It means that if we will get some wash and rinse reaction, some downward retracement, we should keep an eye on the 1680, 1688 support area, where market could reach, and then trying to reestablish our protection to complete the targets, because this is minimum target, and preferably it will be completed. So this type of action I wouldn't treat as a kind of the arm of the hand and shoulders, because this is definitely, we do not see clear signs of the arm forming. It mostly reminds some slow upward action, which is actually not good for reversal pattern. But still, this might be just the way to the neckline, but not the right arm yet, which means that once the neckline will be touched around the COP, right? So here's might be neckline. The forming of the right arm could start, and in this case we also should be ready for downside action. So that led us to create the plan for the next week. So if retracement starts before COP target will be reached, then we could consider 1680 for a possible long entry. So we will discuss this on Tuesday. If market still open higher and complete the COP target first, ignoring the wash and rinse, then don't be hurry up with the taking new long position, because retracement here might be more extended. The very alternative scenario suggests making some bets on a possible upside breakout. If you really would like to do this, although we consider this as a bit, well, adventure scenario, so you could try to use stop buy order around 118.05, somewhere in this area. So in some cases, market will just break it up and keep going higher. So in this case, it would be better to do with the stop buying, but this is a bit, well, tricky stuff. I just talk about this just to show you the all possible scenarios that exist here. The gradual scenario with this channel, possible retracement, seems a bit more reliable to us. So that's what about the 4-time frame chart. In 2 words, reacting on the wash and rinse to the downside. In this case, we're watching for a 1680, 1688. If market ignoring wash and rinse, moving to the COP, we do nothing and see for reaction on the market in this area. On the hourly chart, I do not see something really significant, except maybe this ready to trade bread and butter setup, bullish setup. Because take a look, we have the great thrust, market drop below the moving average, and within the 3 closes below moving average hits the major confidence support area. I'm not sure that we will be able in time to catch it right at the Monday open, because it will happen in the night, and actually market could open already above the target of this bread and butter. But if somehow it will happen that market still will be around this level, theoretically for scalp trading, you could try to take the long position with the minimum target around somewhere around 1740, I suppose. But at the same time, you could keep some part of this position if you're, for instance, out on the minimum target, but you could keep some 30%, 35% of your trading lot aiming on the possible completion of these targets, because these targets are minimal and they have not been completed yet. So big chances that this wash and rinse will become not just aiming on the minimum target, but it will become the starting point for upward continuation to the targets on the higher scale time frame and completion this 1790 area. So that's 2-3 trading setups and opportunities that exist for now. Think about it, decide whether you would like to take it or not, and see you on Tuesday with the update.